Hey everyone, it's Al Eberola for Financial Intelligence Training. It's Wednesday, it's May 30th, it's 2018, and we are wrapping up yet another month. Man, they go by just like that, don't they? Well, hope everyone enjoyed the holiday weekend and is getting back in the stride of things. And if you weren't ready to hop back in the saddle, well, the markets gave you no choice otherwise. Italian woes weighed heavily on the markets on Tuesday. Government shifts are leading to enormous amounts of confusion, and debt concerns are now front and center. Now, Sunday's upheaval of the appointed finance minister by the Italian president jump-started all the fun, and now the concern mounts over speculation over who will lead, and will they be ever so Eurosceptic. The fourth largest economy pulling from the EU saddled with debt can leave no one feeling calm, and that of course is Italy that we're speaking of. Now, this was clearly represented in the market's reaction. Or was it just noise? The noise that I discuss frequently on this channel and with the financial intelligence training students. So turning our attention to yesterday's rout, we really see a tale of two assets. The bigs, well, they continue to lag and underperform. The Dow was punished and it closed down 391 off of its 500 plus point lows though. The S&P sulked down 31, also off of its 44 point lows. In the 10 a.m. spot, Eastern, we saw a quick slide that had SPOOs dropped over 23 handles. That's 23 S&P points for all you jokesters out there, and you know who I'm talking about. Now, I tweeted yesterday that it was dropping so hard it looked like Steph Curry dropping threes in the second half of the game. Parenthetically speaking, here we go again. For the fourth year, the rematch of the rematch of the rematch. The Warrior himself, LeBron, versus the Warriors. Now, staying on topic, unlike the laggards, beta held their own rather nicely. The Russell barely sneezed yesterday, and the Sox had a tiny hiccup. Big beta names like Amazon, +2, Facebook, up a stick, Micron, up a stick, Twitter, a half. Okay, fine, 40 cents. Close enough. And this is the common theme. The bigs are getting smacked, and beta is moving. Now, something I want you to remember is that beta moves faster on both sides of the coin, not just on the way up. So if the institutional crowd is feeling rather comfortable enough to play ball there, then I suppose this bodes well for the rest of the market, and it's going to be difficult for it to suffer. However, if that changes, look out below. Now, however, financial intelligence training students will know that I talk a lot about the financials. And that's where we saw a lot of pain yesterday. There was some serious damage done, and to me, this is a very important area. Now, this is what I would refer to as leaks in the dam, amongst many others. Now, big names like Goldman Sachs, Citi, Wells Fargo, Morgan Stanley, they're all suffering today below their 200-day moving average. Now, last week I discussed leadership from JP Morgan. So here's what the strong look like. Go back to last Tuesday's post when I was in Orlando, and I compared both JP Morgan and Morgan Stanley. Now, both got clobbered yesterday, but one remains above its 200-day moving average. This is why scanning stocks is important, especially if you're trading or if you want to gauge the overall health of the market. But if you're trading, guys, remember that stock and stock options involves a substantial degree of risk and is not suitable for all investors. And if you like watching charts like me, please remember, past performance is not necessarily indicative of future results. I'm Al Eberola, Financial Intelligence Training. Thanks for watching, everyone.